Right. Welcome, everybody. Let me just move this here. It is Wednesday morning. Let's get started. So, first things first, obviously, we love to see this our gold zone marked up, our gold zone tapped, our gold zone rejected, and profits. So, that is what we like to see. We'll obviously go through the trades in a bit, but obviously, as always, we need to obviously do our overview. So, the first things first, what do? We look at the US dollar. All right, this is going to give our overview. We use a 2 hour because it's the best, in my opinion, the best intraday time frame. So kind of if we're looking at everything, in all, we're I think we're going to stay. It's been a very, very strange week personally, because obviously we've had yields absolutely tanking. We got stocks around break even, and we've had dollar, I wouldn't say it's tanked this week. Yeah, it has. We're obviously trading up here, 97,600. I was actually expecting us to stay around near this area. I was not expecting a 96 500 to be tapped. Like always, I recommend marking up every 500. It'll give you a real good scope of where the dollar is, then once you've obviously done it for probably 6 months, you're not even going to need any lines on your chart. And so, if we're looking at the overview of the US dollar here, we can't be looking to buy it. All right. Yes, scalpers might, but obviously we cannot be looking to buy it here. We've obviously got some the data coming out in a bit, which obviously we'll go over. So this should give you your overview. Right. What am I doing with the US dollar today? It's clearly in a trend. I don't care about it popping up, in the short term. So all I'm going to do on the US dollar crosses is look to sell it. And then, before we've even looked at a chart, all we know that we're thinking about is the best place to buy AUD USD, GBP USD, Euro USD, gold, and then obviously sell USD JPY. So it takes that thought process out of you wondering, shall I buy, shall I sell, is this, support? We understand the overview, and then if you've got that directional bias, you're not working off of technicals only. All right, even this is like a small percentage of having what they would call a macro outlook. But obviously it's very, very easy, as you can tell, just by looking at the DXY chart. It's very, very easy. And then obviously we've got yields which are dropping off the face of the earth right now. We're back to 44.1. I'm actually going to remove this. So 4.414%. So obviously drop. The main thing is the daily. You can see here Monday, Tuesday, big sell off here. That means there's not as much money being flooded into the US dollar. That means, to me, consumer confidence, if it was coming out, would drop. Because there's not that much investment appetite into the US dollar. What I'm struggling with at the moment is there's not that much appetite for anything. It's a very, very strange market. We've got stocks holding, all right. So, stocks are holding, very, very, very well. So there's a little bit of money flowing into the, stock market, and then we've obviously got gold here. This is all-time highs, but even gold's not flying. There's no scarcity. There's just not money flowing into the dollar, So I mean, greedy as hell, but it looks like the top 30 companies, the elite of the world, are the ones being flooded with the money at the moment. Because obviously, US 30 is the top 30 companies in the US. US 100 is the top 100. All right, so it just goes to show, the difference between the two. So obviously the money is flowing into these top companies, potentially because they might be that safer overall hedge. And obviously lots of them have been holding lots of cash, which is going to be one of those things where, why are they holding cash? Is there a crash coming? And obviously, cash crash. But obviously, if they are holding all this cash, they're obviously ready. ready for, something to happen. Is this because Bitcoin, is gonna tank? There's even guys here calling out 30 to 40. I promise you, if you do anything, if we go down to this area, it's gonna bounce hard. All right, because that is a great price. All right, anything below 50 is a great price, but I've obviously got, I'm holding long term, like mid 30s. It's a long term investment for my children, but obviously, if it comes back down into that area, yes, I'll be very, very interested. But I do think that it can. I think it can slingshot. And I think, yeah, we've, got to be aware of it. But maybe that's what everyone's, kind of hoping for. But let's wait and see. So obviously going now, going on to the news today. Not a lot there this morning. However, we've got a very, very big afternoon. So trades will not be coming from me. I won't be documenting anything until after 1:30. We've got the unemployment rate, we've got non-farm payroll. I'm expecting, I mean, this has already changed a bit. It was 70, it's come down a bit, to 66. So, it's yeah, I'm on the fence here. I think I think we're gonna have to for dollar strength to change. I think we're gonna have to have plus 100 K new jobs. That's what I'm doing, and then probably a 4.3 unemployment rate, and then obviously yes, we'll be shifting outlook, shifting sentiment. But I think as jobs are expected to increase, yet dollar is still, falling to the downside. These are things that we've got to be, aware of because if it comes in, 66 or 70, anything up to probably 80 and it's still 4.4, it's as expected. So it's not going to change the overall outlook. We might get what we will hope for is a brief, spike up. And then obviously the continuation will come to the downside. So for the dollar to change direction, yes, it's going to have to be plus, 100. And I think we're going to have to tick down the unemployment rate to like 4.3. But if this unemployment rate, which it could, ticks up, then obviously expect dollar to come down and obviously hit that, 96 flat level. Bleh. So why is it? I hate when it does that. There we go. Right. Oh, admit. Coming on to our trades this morning, we've got obviously AD USD. I think our entry was probably just below. So, about break even. We got GBP USD bit of profit. We got Euro USD little bit of profit. We got gold, still a bit of profit. We got probably 50 pips at the moment. I don't know how high I'm expecting everything to go. Again, I'd like to be out a bit like we were one day last week. I want to be out by about 11-ish. So I'll keep you guys updated on that. USDJPY hasn't tapped yet. So yeah, all in all, I know that you guys can't see this. I'm up for this morning. So gold's good, GBP USD's good. So that's been probably the story of our week. Actually, we've done really, really well on GBP USD. We've got this trend down to an absolute T. So that's obviously the main thing, which is good. So yeah, that's obviously all I'm looking at this morning. If we're looking at obviously why we've entered everything. One, we've got to be realistic, and obviously two, we know, like I explained, what the overall trend is. All right, so for example, Aussie's been pumping hard. All right, so obviously that's why I've been aggressive. I'd rather be a bit more aggressive this morning and a bit less aggressive this afternoon. But obviously, as you can see, we've got a lot of, support here. So anywhere within this, zone's good. If this level here breaks, then yes, we're obviously not going to be looking for for obviously buys anymore. Pound, same thing, looking to buy. You can see here, pound's quite a clear trend. Pound. Oh, wrong one. Pound is quite a clear, trend here. That's what I'm expecting. Yes, we could have been a little bit more patient and gone for this area, but again, it's the expectation. Will it actually tap from here, or are we just going to get this continuation? So that's why I went a little bit more aggressive on pound. Um, there we go. Euro, similar. We've obviously got a lot of, support here. Next obviously area would have been sort of this area here. What are the chances of that tapping? Pretty slim, you know. So that's why we've obviously gone for this level of aggression here. Aussie, we've gone through gold. You can see here. It's not gonna pump up too much, but I do think we should hit this 5080 target. And obviously, USDJPY, look at this. We've had no pullbacks at all. And so why are we going to have our entry up here? Realistically, it's not going to hit. So obviously that's why I've gone slightly less aggressive or slightly more aggressive. I've looked, obviously this area here. And obviously, I am happy that we should have a good level of uh, resistance here. So obviously, that's why we've entered that position on that target there. Um, there we go, Greg. So AD, you waited for the price to drop into our buy zone. Understand this for GBP USD, it was on the rise, and we waited for it to. No, you could enter basically how I trade, right, is, very, very basic. Anywhere in this, zone. All right. I don't work off of, exacts. I don't believe in them. We work anywhere here. So anywhere you guys want to enter here, or that is where I am looking to enter. All right. So anywhere within this, zone, and it's up to you how patient you want to be. Some guys, they will. If I zoom out a bit here, some of the guys, what they do is they'll enter on the entry of the zone. They'll enter on the, bottom, and some of the aggressive ones might enter, in the middle. So they might lower their lots a tiny bit. I actually quite like the idea of potentially, if we're waiting for it to come down, I like the idea of entering it there at the top and at the bottom, because what I have noticed nine times out of 10, even if the trade's going to go against us, it will do something like this. All right. And at this point here, you're actually in profit. 'Cause this one's massively in profit. This one's only in a tiny bit of drawdown. But nine times out of 10, if it goes against us, this is what happens. So having an entry at the top of the zone, having an entry at the bottom actually covers us, if it does this. All right. But yes, I do not work off of, exact, zones here. All right. I do not work off of this. I work anywhere within this zone. I am happy. All right. And obviously this is our invalidation here. But if we get a 2 hour close below, right, I will probably look to close out. All right, but this is my overall invalidation. So remember, obviously, I work very, very, similar to obviously how the hedge funds do. So I obviously, look at what's going to invalidate my trade. This is why we very, very rarely have stop losses hit. All right, because a trend has to change, like gold here. All right, gold's the trend, if this gets broken, the trend has changed, yeah. All right, so that's why it completely invalidates it. However, if obviously we get, normal price where it would come back here, this holds, the trend hasn't changed. I make trading very, very easy. Going with overall macros, going with trend. It is that easy. All right. And you will always be. And that's why you saw potentially yesterday with gold, how I think it was this candle here actually, that this one here, I think our entry was about here. All right. Everyone's panicking. I must have so many messages. Oh my God, is gold wrong? Oh my God, and then obviously we have this, huge move here, and we've bagged all of this profit here because we're always going with overall trend, overall macros, and obviously that's what that's what obviously that's the beauty of it is, and obviously that's why we very very rarely get stopped out. So yeah, but yes, Greg, to answer your question, anywhere in that zone. So ideally, our job here, we want to try and enter as low as we can here. We're not waiting for a price, because otherwise what I would do is I'd draw a line, and then I'd draw another line here. All right, but I don't work like that, because I appreciate, timings, everything. So obviously the idea behind my, zones is, you guys know that anywhere with if we're trading anywhere within this, zone, I am happy. If we have a 2 hour close be below, it doesn't matter where our, stop loss is, I will probably close out. Yeah. All right, so we're obviously working on that overall, risk management point of view. Morning, Dan. When are you planning on updating your course to include this macro trend approach? So basically, obviously, I've got a Bloomberg terminal. So I'm trying to look into ways, very very simply, of explaining some of the stuff. I've done one video. We just haven't uploaded it, so I will get that uploaded. But yeah, I'm probably going to look. I've taken on a few of you guys, mentoring you one to one. So I'm pretty busy, if I'm honest. Probably for this month. So what I would do, I'll make a point April. I'm gonna probably work on it, but I'm gonna think of some topics, obviously, for our March boot camp. And so obviously the macro video that I did for this month's boot camp was pretty good. You guys need to obviously scroll up and have a look through it. But obviously that was a good solid video, and overall of obviously macros on gold. So have a scroll up through the channel, it's there. So yeah, but right, if there's no more questions, yeah, then I'll hold it off here. Let's just have one more check of where we're at here. So we've got yeah, so we've got Aussie's dropped, and the others are break even or in a bit of profit, which is good. So there we go. Right. I hope everyone has a great Wednesday. Remember, we've obviously got non-farm payroll, so my plan is to be out by probably 11. We obviously need to make sure that obviously we stay kind of vigilant. Don't take a gamble. Um, I always find if I predict it and I'm patient, things go my way. Whenever I take a gamble, it goes the other way. So obviously that's why. Remember my analogy. We need to wait for the waves to be created by the data, and then once they're created, we obviously know when to hop in. So yeah, have a great day, everyone, and obviously I'll keep you guys updated.